We've seen a divergence this year between higher income consumers and lower income consumers, and a lot of folks are talking about this K-shaped economy. What does it really mean for consumers in terms of their credit? We're here today with the CEO of VantageScore, Silvio Tavares, to talk about that and so much more. Silvio, thanks for joining us.
Thanks for having me, Sharon.
Let's start by talking about VantageScore. What is VantageScore?
Well, VantageScore is one of the leading national credit scores. We were established approximately 20 years ago by the three leading credit reporting companies, Experian, Equifax, and TransUnion. Since that time, we've grown to be a major player in the credit scoring industry.
How many consumers have a VantageScore?
Over 220 million people, we estimate, use the VantageScore to check their credit score. We score more people because our algorithms are newer, but also because we use the best alternative data and trended data. An example of that alternative data is rental data. If a consumer pays their rent on time for years and years, well, with our competitor score, they don't get any credit for it. But with the VantageScore, you do. And that's one reason why recently the government allowed VantageScore to compete to be the score used for conforming mortgages backed by Fannie Mae and Freddie Mac.
It's interesting that you're offering this to people who may not have been counted before, and I'm wondering if that gives VantageScore a different perspective when looking at what everyone's been talking about in terms of this K-shaped economy, looking at the higher income consumers being at the top of that K, and then the lower income consumers and the pressure that they're feeling at the bottom end and that divergence that we're seeing. What is your outlook right now for where the consumer is today and where they're going to be in 2026?
Well, where they are today is exactly that K-shaped economy. That's been the dominant theme throughout this year, and we saw it heading into the holiday season. Those that are higher income and middle income, they kept shopping. Retail sales were up Black Friday, up 4.1%. When you look at the lower income consumer, they're not shopping as much. They're more exposed to the inflationary pressures, typically of not being a homeowner. Their rent is going up, and they're not protected against that. So that's been the dominant theme. And in fact, for high income and middle income consumers, their late payments, they've actually dropped 3 of the last 4 months. But when you look at the lower income consumers for that same period, their delinquencies have increased. And so that's a cause for concern as we finish out the holiday spending season, but it's also a cause for concern for 2026.
So do you think that the K-shaped economy will the divergence continue? Will it widen? Will it close? What do you think?
One of the biggest drivers of the K-shape is one single item, homeownership. Those consumers that own their own home have the ability to have more of a cushion when the economy is rough. They're also not exposed to inflationary pressures around rent, which has increased substantially. So that's one of the reasons we're so excited about VantageScore's opportunity to open up homeownership to millions more consumers so that they can own their piece of the American dream. And we know from all of the data that when consumers buy their homes, they also spend in other areas. 2/3 of the U.S. economy is made up of retail and consumer spending. And when you buy a home, you tend to want to fill it with nice things, and that's going to boost the economy as well. We're very excited about that for 2026.
You sound very optimistic, but the latest report on consumer sentiment from the University of Michigan showed that many consumers are not as optimistic as they were even at the beginning of 2025. Do you think that there's a difference here between what people are feeling and what they're actually doing?
Well, I think the challenge is that K-shape. So when you look at averages, the way we assess credit health for the average consumer is by the average VantageScore. A very low VantageScore, in fact the lowest is VantageScore 300, the highest is VantageScore 850. Through the end of October, the average VantageScore was 701. So you look at that number, and the average consumer is very healthy. But when you step back, you realize that's the average. That's the top of the K and the bottom of the K being averaged together. And so the reality is there's a tale of two cities dynamic going on, and both things can be true. There are many consumers that are actually experiencing very good economic health. If they're homeowners, if they have 401k invested in the stock market, they're feeling pretty good. But if you look at many consumers that are lower income, they are actually challenged and exposed to inflationary pressures, increasingly job cuts. And it's that group that's going to be helped the most by a lowering of interest rates and also a resurgent housing market.
Thank you so much for joining us to share your insights.
Thank you, Sharon.